Well, hello, traders and investors. Today is January 5th. It's Tuesday. It's the second trading day of the year. We've got a lot of stuff going on today. We have political stuff going on today. Today, we're going to figure out whether Democrats or Republicans control the Senate. And that's really, really important because if Democrats control the Senate and Biden is elected, you have a Democratic government. If Republicans win, you have a check and balance. Now, it looks like Republicans are leading, but God only knows how things are going to turn out, especially in light of all the wackiness we've been seeing. So I'm just going to go with the market. I'm going to go with the predominant theme right now. The market, for the most part, is ignoring the political climate day to day. It's really focused on COVID right now. The markets opened up about 140 points yesterday and were down by the end of the day. That's a bearish session or a bearish indication of what's to come. So in terms of news and reports, the major report today is the ISM Manufacturing Index. And that's going to determine if manufacturing is on full steam ahead or a little bit slower. And I think the numbers are going to be kind of mixed. The big report this week, again, is going to be the jobless claims and the employment data and the FOMC minutes, although I'm not really expecting the FOMC minutes to give us too much guidance because the Fed that we have now loves to give projections 2 years in advance. As I always say, I'd love to play poker with this Fed. Now, in terms of daily data, folks, the focus right now is COVID. What did I tell you over the last quarter? Even though markets started looking forward to this quarter, what did I say? Healthy people are not going to get vaccines till next quarter. Folks, the state in LA right now, in Los Angeles, I was just reading a local paper in LA, 1 in 5 people has COVID, and the ambulances have been instructed not to take people to the hospital that look like they have low chance of making it. I swear to you, I just read this a minute ago on a national publication. So things are not getting better. They're getting a lot worse. And we're not expecting any relief from this at least till next quarter, because that's when most people under 65 who are working, who are contributing to society the most, having the biggest impact adding to the GDP, are going to get vaccines. So we are in a bad position right now. In light of that, let me read the global report and then I'll give you my low-hanging fruit for the day. So global shares turned lower Tuesday as more countries impose restrictions on businesses and public life to cope with stubborn increase in COVID infections. Pretty much what I just said. COVID cases climbed as frightening rates around the world, more lockdown orders to fight the pandemic threaten to undermine global economy. Folks, it's happening. Countering progress thanks to a rollout of the vaccine. Remember what I said? It's like a James Bond movie where you have a madman at the missiles and then you have James Bond running to save the day. I'm not kidding. That's where we're at right now. It's like every day that goes by, thousands and hundreds of thousands more people are getting infected. And there really isn't a vaccine right now for the mainstream to get relief. And that's a big problem, at least in the USA. With investors are also looking ahead to the runoff elections for Senate seats today. That's going to be huge in Georgia. That will determine whether Republicans retain control of Senate. And I think they will. At least I'm hoping they will, between you and I. I like checks and balances. I like to have a checks and balance system. That's just my opinion. The vote is expected to have a critical impact on the potential effectiveness of President-elect Biden. But I'm going to tell you something right now. Typically, historically speaking, the market and president are fairly far apart. There isn't the president does not determine everything that happens in the stock market. Although it seemed like it with Trump, it's not usually the case. So just FYI, so you know that. On Monday, U.S. stocks pulled back from their recent record highs as big swings returned to Wall Street at the onset of a year where dominant expectations has been for a powerful economic rebound. Second part of the year, folks, not the first part of the year. Investors have been hoping that the vaccine will allow daily life around the world to slowly return to normal. Are you guys seeing that? Are you seeing regular daily life returning to the world right now? I'm not seeing it at all. That's helped spark a recent recovery for travel-related stocks. I'm not seeing it. Smaller companies, other industries left behind for much of the pandemic. Folks, from where I'm looking right now, things are just not getting that much better. I mean, things are maybe in other countries. Germany's closing things up again. England is closing things. Europe, I think, is closing things up the third time around. Asia, I think things are still okay as far as I could tell. In the US, California is in a doo-doo situation right now. So things are not getting better. But I got low-hanging fruits for you. I want to show you something. This is my 10 sectors. Now, there's a few things you can take away here. First, financials are leading. But let me show you something. Look at a 2-year chart of financial. We never took out the high prior to the breakdown last February. So as far as I'm concerned, financials have not recovered or have not shown market participants that they're ready to go higher because they still haven't gone high enough to take out the previous February high. And as far as I'm concerned, if you haven't taken the February high, you're basically telling us you're still worried about the impact of what happened almost a year ago. So I would not be looking at financial at all right now. Here's the other takeaways. Notice material and industrial are not next to each other. That means the market is fragmented. Notice consumer staples and industrial and basic materials are far away. That's a fragmented market. Typically, basic materials are right next to industrial. Financial is right next to real estate. Utilities are real close to healthcare. The bottom line is this is a fragmented market, and this is a market that needs to pull back. But instead of giving you the best probabilities and best trades to make money to the long side, let me show you some low-hanging fruits. What's the weakest sector? Real estate, right? Real estate. Look at this. 16 something for financial over the last 6 months, 3 months, and 1 month. Real estate, negative 2%, 4%, negative 3%. Do you think commercial real estate is going to do well in light of all this COVID, especially in big states like California, New York? Remember all those REITs, commercial property REITs that we thought were going to go higher and we were ready to buy them? And I said, wait for them to make all-time highs. Well, I got 3 for you today to sell short. So Avalon Bay, commercial real estate, huge exposure in California. I actually sold a property to them about 10 years ago, a commercial lot in Encino. So look at the graph, 2-year graph. This is the previous peak high. We go down, we go sideways. We think the market's going to come back up. It starts cooling up. And what do you see? At the 200-day moving average, filling in this gap right now. Let me show you short term. I think this gap is going to get filled. We're now crossing the 200-day moving average. I think we're going to go down all the way to the 130 level. I'm not kidding. I have not been bullish on real estate, especially commercial real estate in this economy. Folks, do you know anybody who's seeking commercial real estate in this economy right now? Let's be reasonable here. No. So I think there's a good low-hanging fruit here to short AVB or buy puts. Next one, Boston Properties. Same thing. Makes an all-time high, swing high here, breaks down, thinks that it's going to come back up, begins moving higher last quarter in hopes that the COVID is over, in hopes that the vaccines are out. What was Roger telling you? It ain't going to happen till second part of the year, or at least second quarter. We're approaching the 200-day moving average. I would sell short right at the 200-day. I think we're going to fill in this gap to the downside and go from 90 to about 70. Or buy a put if you don't want to sell short. Next one, same topic, Federal Realty Investment Trust. Mixed use real estate, commercial real estate. Again, makes an all-time swing high right here. Falls below the 200-day moving average. Trades near the lows. Goes up a little bit higher. And then again at the 200-day moving average. Folks, I think FRT, BXP, and AVB are all going to break down and go test the lows. So you got exposure from 80 to 67 here. Here you got exposure from 89 till 70. Here you have exposure from 155 all the way to 130 that you can accumulate. So that's like 20 points here, 20 points here, and about 14 points here. So again, FRT, BXP, AVB. They're all in the REIT business. They purchase commercial real estate and they rent it out. And right now, commercial real estate in big cities is just doing awful. And folks, if you think it's going to do well in the next 6 months, let me sell you some ice in the winter. You get my point? So fade these stocks, AVB, BXP, and FRT. And if you're long these stocks, we're about to hit the 200-day moving average, folks. The stock market's at new highs. If the stock market goes down, remember the weakest stocks go down first, all right? And the strongest stay strong. Now, I got something big for you. Don't go anywhere. Folks, the stock market can be unpredictable, as we all know, right? Especially given today's social and political climate. Luckily for you, I've come across a trading strategy that could bring you some calm during this market storm. Wouldn't that be nice right now? It's called trophy trades. And over the course of 20 years, the man behind the market proof strategy has won 206 out of 213 trades. That's amazing. That's a 97% win rate. You've got to check this out. You're not going to want to miss out on the next trophy trade. Click on the link below. See how you can access it today. You don't want to miss out. It's critical. There's something happening today at 1 p.m. Eastern Time. You don't want to miss out. Follow the link below. If anybody told me that out of 20 years, 97% trade accuracy, this is some really good stuff. You got to check it out. Talk to you soon and post some comments and feedback below. Bye, guys.